By the end of this video, you'll know exactly how to turn one property into a portfolio that generates passive income for decades. Here's the thing. Most people think you need a massive down payment to get started. You don't. I'm going to show you 3 strategies real investors used, starting from zero. And the third one? It's the reason some investors own 50 units while others are still saving for their first deal. Every portfolio starts with one property. And the easiest way to get that first one is house hacking. You buy a multi-unit building, live in one unit, rent out the rest. Your tenants pay your mortgage. My friend Marcus, a nurse in Phoenix, bought a duplex in 2019 using an FHA loan with just 3.5% down. The monthly rent from his upstairs neighbor covered $400 of his mortgage. $400. He lived in that duplex for 2 years, built up his credit, saved more cash. Marcus now owns 4 units. He started with less than $15,000. Yeah, I know. But the numbers are real. Here's what most people miss. When you live in the property, you qualify for owner-occupied loan programs that investors can't touch. Lower down payments, lower interest rates. That advantage disappears once you move out. House hacking gets you in. But what happens when you're ready to scale and the bank says no? That's exactly when the BRRRR method becomes a game changer. Buy, rehab, rent, refinance, repeat. Yes, it's an acronym. But this one works. You buy a distressed property below market value. You fix it up. You rent it out. Then you do a cash out refinance based on the new value. Your money comes back. The property stays. You repeat. A woman named Diana in Atlanta found a foreclosure nobody wanted. Picked it up for $85,000. Put $30,000 into repairs. Rented it out for $1,500 per month. Refinance based on an as-is value of $190 after repairs. 75% of $190 is $142,000. She pulled out most of her cash. Bought another property 8 months later. Diana now has 6 units. Her tenants are funding her portfolio while she still holds the same amount of cash she started with. If this is clicking for you, a quick subscribe helps me keep making these. And the best one is coming up next. All right, so house hacking gets you in. BRRRR gets your capital back. But what if I told you there's a loan program that skips conventional lending entirely? No debt to income walls, no waiting period after your last purchase, just income documentation and the property itself as collateral. These are called DSCR loans, debt service coverage ratio. The bank doesn't care how much you make at your day job. They care whether the property generates enough rent to cover the mortgage. Usually they want the rent to be at least 125% of the payment. That's it. An investor named Carlos in Houston maxed out his debt-to-income ratio by his 4th property. Conventional lenders kept saying no. He switched to DSCR loans and bought 3 properties in 18 months. Now he has 9 units. His portfolio produces $22,000 a month in gross rent. None of it is tied to his day job anymore. His tenants are paying for his real estate career. That one shift, moving from income-based lending to asset-based lending, could save you more than the first 2 methods combined. Because suddenly the only limit is how fast you can find properties that cash flow, not how much you make, just the math on the deal itself. So there you go. 3 real paths from one property to a portfolio that works for you. House hacking gets you in with low money down. BRRR lets you pull your capital back out and recycle it. DSCR loans remove the income ceiling that stops most investors in their tracks. Pick one. Start there. The investors who build real wealth aren't the ones who found the secret strategy nobody knew about. They're the ones who picked the strategy, executed it, and repeated it until it worked. If this video helped you see a path forward, share it with someone who's been putting off their first investment. And subscribe. I'm breaking down more real estate investing strategies every week, including one that could change how you think about commercial properties entirely. See you in the next one.